Microlending is growing at a very fast clip in India. The microlending portfolio across lenders of all categories grew by about 30.9% to 4 lakh crore rupees during the December quarter. Now, the overall portfolio also showed a 6% growth when compared with the preceding September quarter. Now, non-banking finance companies or microfinance institutions continue to dominate the sector with a market share of 38.3%, followed by 33% share for banks, 17.4% for small finance banks and 9.4% for NBFCs. The loans that are not serviced for over 30 days were also seen stable at 2%, while the same for over 90 days was also stable at 0.9%. The average balance per borrower also inched up to 48,900 rupees during the December quarter from 48,200 rupees in the quarter ago period and 46,900 in the year ago period. So literally 2,000 more rupees and more money per each borrower in the last 1 year. A bulk of 83% of the borrowers had exposure to less than 2 lenders by December, with Tamil Nadu having the highest prevalence of multiple borrowings per borrower. What does the trend really mean as far as microlending is concerned? Krishna, we've been discussing how lending is picking up in a big way. People are borrowing more, they're saving less. And just yesterday, in fact, we had 2 economists on the panel discussing how borrowing may not be a wrong or an indicator to be wary of or be worried about. It may actually tell you that people are becoming more ambitious when it comes to spending.
Right. One is that aspirational spending that people do. And this, we're talking about micro lending, which we're talking about small ticket size loans, which people are taking. And, they say that, micro lending doesn't, tap into more than a third of the demand that exists already. So there is a lot of space for micro lending to grow. So these growth numbers are also at a very early stage. Of course, the approach to money has changed. The approach to loans have changed. Once upon a time, aaj nakad kal udhar, was the philosophy of most Indians, which means that debt was a bad thing. Debt was essentially something that you don't do. But at the same time, we've seen the growth of credit cards in this country, which is nothing but actually debt in a cool, plastic card that you get. So clearly, the millennials, the generation of millennials onwards, millennials and Gen Zs don't look at money and don't spend money the way the boomer generation did, the baby boomer generation did, and the generations before them did. So clearly, there is a lot of room for the growth of loans and availability of finance at this stage because of, you're talking about so much of uncertainty in the job market, so much of, uncertainty when it comes to pay raises and, availability of cash. So the ability to borrow loans, the access to loans and funding, and also this eventually will result in the way people manage their finances. Managing their finances will also be about how to manage the loans that they take and how they repay the loans that they take. And of course, then you have something called as a credit score that tells you how well you service the credit that you take. Do you pay back your loans on time? And then your ability to get loans get impacted on the basis of how well you've borrowed and repaid all those borrowings. So when it comes to lending, I think we are in a different stage of evolution as far as the way money is being treated by people. So micro lending is at a very nascent stage in India and has a lot of room to grow, they say, going forward.
And there's no change in loan servicing, which essentially mean people are taking that loan but are also paying back as desired within the stipulated time. In fact, more loan that they are taking, they're also servicing that loan within the desired period. It may just hint at the fact that there is more credit uptake, while there may not be any, as far as credit is concerned, people are in fact having the capacity to pay back on time. On that discussion yesterday, there were a couple of very interesting points that emerged, Krishna, one of which stood out for me was the fact that even though the borrowing has upped, it may not be the case across all income groups, because we had Professor Arun Kumar on the show. He said that it's a very small section of the people who have access to credit, but that picture is also fast changing, with access to credit and credit penetration growing at a faster clip than ever before.
Yeah, right. But there's also a crackdown by RBI on unsecured loan companies. So this sector is at a stage where it needs better regulation as well, and it needs more caution before it is allowed to explode in any which way, because some of the loan retrieval efforts have come under question by some of the companies. So the fact of the matter is that we are at a very early stage of evolution. If it's available more, then it means that more of them are at risk. as well, because just because credit is easily available, so many people borrowing money to invest in the stock markets, losing the money, and eventually that leading to dire consequences as well. But just because credit is so easily available, personal loans, people call you and offer you personal loans these days. So, there has to be a balance is what I feel at this stage.
Absolutely, and these are very early indicators. So in order to understand any structural perhaps change, one will have to wait for more data to be made available. That was also the word that came in yesterday. We cannot be be sure at this point whether there's been a structural change when it comes to either savings or taking loans as far as Indians is concerned. So we'll have to wait for more data to emerge.